Good morning, everyone. I'm going to call this meeting to order. This is the Audit Committee meeting for MARTA, Friday, November 22nd, 2024. Thank you, everyone, for attending. The first item on the agenda is approval of the August 15th, 2024 Audit Committee meeting minutes. Can I get a second? All right, it's been moved and second. Are there any changes? Hearing none, may I have a vote? Ms. Jennifer Ives, are you?
Yeah, I'm a yes.
She's the next. She's going to help you connect. Okay, thank you. All right, the meeting minutes have been passed. We have a few items on the agenda this morning. I think they're important as we talk about this whole audit process that MARTA goes through. The next item on the agenda is the 2024 MARTA Management Audit Highlights. Catalina Mazur, Director of KPMG, will be presenting this morning. You have the floor.
Thank you. Is my volume all right? Can you hear me now?
Yes,
all
we
right,
can.
Perfect. Thank
Yes.
you. Mr. Chairman, Mr. Greenwood, members of the board, my name is Caitlin Messier. I'm a director in KPMG's advisory practice, and I'm here to present to you a high-level summary of our findings and methodology from the 2024 MARTA Management Audit that was conducted earlier this year. This summer, I led the team that performed the Quadrennial Management Audit, which is a requirement that fulfills the MARTA Act. KPMG previously conducted this body of work in 2020. I have a member of my engagement team, Mr. Jignesh Patel, here with me this morning. Could we go to the next slide? Where can I click? Thank you. MARTA engaged KPMG to assess the authority's portfolio of operational and management policies and procedures, as well as its adherence to them across the 9 key functions that appear in the royal blue boxes. My team also assessed the authority's utilization of IT systems for efficiency, effectiveness, and performance. As this was a management audit, KPMG was responsible for assessing how well the authority's department leads leverage their people and technology resources, implement new tools and strategies, and work in the interest of the state and general public. We focused on reviewing the organizational structure, departmental processes, and quality of documentation rather than MARTA's finances and accounts. The 2 bottom boxes capture overarching and specific observations that could not be neatly compartmentalized within the scope of these 9 areas. In our report, we created standalone sections for general findings with cross-departmental impacts, such as the absence of a centralized repository for the authority's entire library of policies and procedures. Right now they're kept at a departmental level, as well as pointed findings like technology upgrades that affect safety and originated with the MARTA Police Department and Department of Safety and Quality Assurance. For consistency and comparison, my team implemented a 3-phased approach that followed the methodology from the 2020 MARTA Management Audit and has also proven effective with KPMG's public sector transit client base. During Phase 1, KPMG facilitated a kickoff meeting with our project sponsors from the Department of Internal Audits. We introduced our teams to one another, reiterated project objectives, determined the preferred method of documentation and data sharing, and refine the interview list of MARTA personnel. The Department of Internal Audit provided KPMG with the contact information, communicated the purpose of our interviews ahead of time, and generally encouraged collaboration and active participation throughout the engagement. The bulk of our work was conducted during the longest phase, information gathering and analysis. During Phase 2, KPMG reviewed existing policies, procedures, and governance models. We interviewed 29 key personnel to better understand current strengths and opportunities for improvement. This helped us identify areas of potential risk, possible control gaps, and non-value add activities that we wrote up as draft observation and recommendation pairings. During Phase 3, KPMG refined our draft report with the goal of enhancing MARTA's daily operational performance and mitigating risks. We conducted 10 validation sessions with key personnel that represented each of the core 9 functions, in addition to ad hoc communication to further delineate our findings. Next, MARTA provided feedback, which are labeled as MARTA responses throughout our report. Once KPMG incorporated MARTA's feedback, we issued the final 2024 MARTOC management audit that was provided to you earlier this month. Throughout each of these phases, and from executive assistants to the C-suite, MARTA was fully cooperative and allowed the KPMG access to its documentation and personnel so that KPMG was able to conduct a high-quality management audit on time and on budget. This slide and the next are intended to provide more specifics on the activities performed by the KPMG team between project kickoff and June 17th and conclusion on August 23rd. During those 10 weeks, 29 MARTA personnel, representing approximately 24 business units, made themselves available to my team for 27 interviews and 10 validation sessions. As a result, KPMG developed 45 unique observation and recommendation pairings. This slide illustrates those 45 findings. KPMG assigned each observation and recommendation a priority level intended to help the authority allocate resources effectively and address the most critical areas in the near term. The priority level, high, medium, or low, is based on impact, with the goal of enhancing return on investment, developing efficiencies, and increasing compliance with existing policies and procedures. An example high priority item is the current staffing retention challenges in rail and bus operations that can be attributed to the collective bargaining agreement requirement that rail operators begin their MARTA careers as bus operators, even if they have previous experience with other major transit systems. This makes it difficult to hire qualified candidates who would be ready to begin as rail operators with less training time and fewer onboarding costs for MARTA. A sample medium priority item is the need to create new policies helpful to address reoccurring scenarios. Currently, neighboring transit jurisdictions and community organizers request the use of MARTA buses as mobile cooling stations for sporting events and road races. Fulfilling these requests for non-transit operations can temporarily remove up to 20 MARTA buses from service and can encroach on the 4 hours of downtime needed daily to clean, maintain, and service MARTA resources to keep them safe for ridership. Recently, bus operations and the Department of Customer Experience presented the Board of Directors with their input on the appropriate approval timeline, cost recovery methodology, and when special requests should not be considered, such as during times of high peak demand travel. Low priority items include a KPMG recommendation that MARTA broaden its customer feedback and data analysis capabilities by developing key performance indicators that capture engagement across social media, the website, and MARTA apps. MARTA plans to leverage Power BI dashboards to collate and review voice of the customer surveys results with the goal of delivering an improved experience with enhanced self-service options. You'll see that KPMG identified 17 high, 21 medium, and 7 low priority items for a total of 45. This trended similarly to the number of 2020 findings by priority, when there were 9 high, 14 medium, 3 low, and 7 unranked for a total of 33. It's important to note that the increase in the total number of findings over the past 4 years is not indicative of poorer management or performance. Rather, the increase can be attributed to the willingness of department leads to make themselves available to KPMG and candidly shared pain points within their respective departments. In conclusion, KPMG recognized across-the-board departmental improvements between the 2020 and 2024 management audits. For example, MARTA adopted several of the recommendations provided in the 2020 report related to technology upgrades and addressing gaps in policy and procedure repositories, including implementing periodic review and update cycles. The time and effort that department leads and internal audit have put into ensuring that their staff meets the authority's quality standards and adheres to its policies and procedures, all while multiple system implementations are in process, is commendable. With an operating model that's informed by updated policies and procedures and renewed dedication to success and continuous improvement, MARTA will continue to see return on investment, greater efficiency, and long-term sustainability as a best-in-class transit system. Mr. Chairman, thank you for your time. This concludes my presentation.
Thank you. Appreciate it very much. Are there any questions we have from the board members? Any comments?
I just wanted to say thank you to all the MARTA staff that worked on this. It's nice to see those lovely comments, and we appreciate all the time and effort that went into this.
Great. Thank you also. And once again, it's a pretty favorable report. I liked the comments concerning about continuous improvement here at the enterprise.
Yes, sir.
And that they continue to do those things to bring value to the enterprise. And so wonderful. Any other questions, comments? Hearing none, thank you very much.
Thank
Appreciate
you.
it. The next item on the agenda is MARTA's annual internal financial audit for 2024. Brad Shalley, he's the partner with Crow LLP. You have the floor.
All right.
External, I'm sorry, it's external. Yeah, external
Yep.
Financial audit. Thank you.
Good morning, Chair. Good morning, directors. Glad to be here with you all today. My name is Brad Shelley. I'm an audit partner at Crow, and we are here. I'm here to present the external audit results to you all. I think you have seen the draft reports, and I have just a short presentation to walk through those drafts and the results of the audit. So on this slide, you'll see the objective, scope of work, and a few other items of note here wanted to walk through. So as I said, this is an external audit, so the objective of the audit is to express an opinion on the financial statements. MARTA prepares those financial statements, and management is responsible for those. Our responsibility is to perform the audit procedures and then provide an opinion on those financial statements. Part of that is obtaining a reasonable assurance about whether the financial statements are free from material misstatements. And then again, that's what we are providing as an opinion on that. There were two new accounting standards this year, and I know I mentioned these back, I think, in May as we kicked off the audit process. Neither one of these had any impact on the financial statements, so you won't see really any information in the footnotes to the financial statements about these, other than saying that they were implemented, but there was no financial impact, no new disclosures as a result of that. Two other items of note here that I just wanted to mention. This year we did have two major federal programs. Typically we just have the one major program based on the requirements and the amount of federal dollars that were spent this year. You'll see there were two. We did not identify any issues with either of those, but just wanted to point that out. And then the other item of note here, you may be aware we did some additional testing around the Josh Rowan civil case that was filed. Based on the additional procedures that we did not identify any issues there. So while that did increase the risk level from an audit standpoint, that resulted in us performing the additional procedures. Based on those procedures, we didn't find anything that we needed to pursue any further. As far as the overall audit approach, I know, again, I went through this at a high level in May. But I always think it's helpful to include that on here again, just to give you a refresher on kind of the process and how it works. We start in early to mid-May doing our interim field work, and planning actually starts even before that on the internal side. The year-end field work was all done remotely again this year, but that actually happened from about mid-August through mid-October. So a good amount of time, a lot of requests made to management to provide information for us to be able to complete the testing procedures. And then we move into the reporting stage where we're reviewing the testing, reviewing management's financial statements, and preparing the reports. And then ultimately delivering and discussing the draft with you all today. As part of our audit procedures, we do consider fraud and potential risks of fraud. So we're not performing a forensic audit, so we're not looking for every instance of fraud. We're not searching for those, but we do try to assess where there might be some potential fraud risks, and then we do certain procedures around those risks. So you'll see some of the things here. As I mentioned, we did not identify any issues of fraud. We did, as I said, went through the Rowan civil case, read through that, made some inquiries, did some testing around there, did not identify any concerns. Some of the other testing procedures are listed here as well. We look obviously around journal entries, revenue recognition, financial reporting, those types of things. Did not identify any instances of fraud or anything that was even suspected based on our procedures. The deliverables are listed here, and again, these are consistent with previous years, so there's nothing new that is listed here, but it's really kind of broken down into 3 segments. The first section at the top is reports that are related to the financial statement audit, so obviously the independent auditor's report in relation to the basic financial statements, and so we are providing an unmodified opinion, which is the highest level of assurance that we can provide. We also provide a management letter which outlines any material weaknesses or significant deficiencies in internal controls, which we did not identify any. And then a SAS 114 or audit communications letter, which just outlines a variety of information, most of which I'll cover here on the back half of the presentation. The middle section here describes the different reports that we provide in relation to the single audit, which is related to your federal expenditures. So you'll see there's 2 different reports there. Independent auditor's report in accordance with government auditing standards, which is more focused on the financial statements themselves. The second report is independent auditor's report in relation to uniform guidance, and that is specific to the 2 major programs that we tested this year in compliance with those requirements. We also do provide what's called an in relation to opinion on the schedule of expenditures of federal awards. And again, that's the schedule that just lists out all the federal dollars that you spent during the year. Then the bottom half is just a couple of other procedures that we do as part of the audit. The first one is the agreed upon procedures for the NTD, or the National Transit Database submission. So that submission is required every year by October 31st. We did provide our report related to that. Those agreed upon procedures, again, are set procedures prescribed by the FTA, and so we're performing those procedures. Did not identify any issues or concerns there. You do have adequate supporting documentation and systems and controls in place to prepare that data. And then the last one is one that we will do at the very end of the audit, which is submit the data collection form to the Federal Audit Clearinghouse. That is, again, part of the single audit process. So that's a lot of information about all the reports. As I have in the past, I did want to give you just a little bit of information about some of the numbers and the financial results related to the financial statements. So on this first slide, you'll see your statement of net position, or your balance sheet, and some of the key amounts here. You can see the assets, and it's a little bit hard to tell on this because for the most part things are pretty consistent, and you are looking at pretty big dollar amounts, but you'll see that the assets did decrease slightly from about $4.75 billion down to $4.6 Again, pretty nominal decrease there. On the liability side of things, you'll see that it has went from 2.9 billion, down to 2.9 billion in FY24. That was up as high as 3.3 billion in FY22. So you are seeing, even though the assets are decreasing some this year, their liabilities are also decreasing. And then you'll see how that correlates. The net position there is pretty much flat as far as change, about 1.64 billion in net position at the end of the year. On this slide, it's presenting some of the information on the statement of revenues, expenses, and changes in net position, or your income statement. Starting in the first column on the left-hand side is your operating revenues, actually flat this year, so 81 million this year and the same amount last year. That's up from 72 million in FY22. And again, the operating revenue is primarily your fare revenue. That's what's driving that. On the expenditure side, you do see the increase in expenses, which is common across not only public transit, but across all industries, generally speaking, with inflation and within public transit, the cost of providing transit services. So that has went from about 870 million in FY22 now up to a little over $1 billion in FY24. On the non-operating revenue side, you'll see that is a slight decrease. That's where you have all of your sales tax revenue, your federal grant revenue, state dollars, etc. That's all within here. Biggest driver of that decrease is some of the federal grants as that COVID money starts to be used up. The next section, the fourth one here, which is really small bars, is the capital contributions or your capital grants. Pretty consistent here, about $48 million. Again, those are grants that are specifically for capital purposes. And then the last one is your change in net position. And this is the one where you can see the most variation, as it's went from a positive 250 million down to 123 million last year. And this year was actually a slight decrease or a loss of about $19 million. Again, the combination of rising operating costs, the federal grants related to the COVID dollars, those are being spent and going away, is what's driving this change. These last couple of slides here just go through some of those required communications I said are included within the SAS 114 letter. So I won't go through each of these, but a couple things to point out on this. This slide is pretty consistent with the prior year. No concerns here. Just listing some accounting estimates, some qualitative aspects of your accounting policies, etc. No concerns there. On this slide, it goes through corrected and uncorrected misstatements. And so we did not have any corrected misstatements. That would be an adjustment that we found during the audit process that we proposed, and management recorded that adjustment. There were none of those. We did have one uncorrected misstatement that you'll see listed here, and that was related to about $12 million in legal settlements that were settled subsequent to year-end and recently. So the reason why this was uncorrected was just simply due to timing of when management became aware, and actually when MARTA settled these lawsuits, I believe was in late October. And so there's a process that management goes through annually to understand what lawsuits may be out there, what claims are out there, and then you have to make an estimate on what is going to be, what needs to be recorded based off of that. The accounting requirements, you have to have an understanding, you have to be able to estimate what that amount is, and then you have to be able to make some kind of judgment of whether that is likely or not. Oftentimes, you're not able to make that judgment. In these cases, they were not able to make that judgment earlier in the process. Then they were ultimately settled late, and due to how late it was in the process and how far along we were in the audit as far as having the financial statements prepared, reviewed, etc., management chose to just waive that adjustment. And so those lawsuits obviously are going to be settled, they'll be paid, but that'll hit in fiscal year 25 versus in fiscal year 24. So that's the reason why there no error or anything like that. It's just a matter of timing and when those were settled. The other items on here I already mentioned: significant deficiencies and material weaknesses. We did not identify any. We did have a few minor deficiencies, always best practices that we bring up to management, but nothing that rose to the level of a significant deficiency or material weakness, so very positive there. And then some other communications that are required. Again, we did not have any difficulties, disagreements with management, anything along those lines. Very cooperative, not only through the normal audit procedures, but as well with the additional procedures that we did this year. Everyone was very cooperative in providing the information that we requested, and there was no, holding back any information from us as we worked through that process. The last slide here, again, as you may recall, I always like to give a little bit of heads up on what's coming down the pike, or maybe things to be aware of. There's a few things for next year's financial statements, fiscal year 25. There's 2 new accounting standards that will be required to be implemented. GASB 101 related to compensated absences. With that one, there may be some slight impact to that, as you will be required to look at the different types of leave that you have and assess that liability slightly differently. I don't anticipate it having any kind of significant or material impact, but there may be some minor changes there. And really that'll be, most likely it's going to be just additional work for management and the finance team to go through to implement that with probably a minimal financial impact. GASB 102, certain risk disclosures, is one that is also required for next year. That'll require potentially some new disclosures in the footnotes, so it won't change any balances or numbers in any accounts, but it potentially would require some additional disclosures. And then looking ahead 2 years down the road, GASB 103 and 104 were just 104 was just released about a month or 2 ago. There will be some impact on MARTA related to these, but again, I don't anticipate major impacts like, say, a few years ago with GASB 68 and 75 with pension and OPEB, where you had to put a large liability on. There's nothing along those lines. Some changes in your management discussion analysis, some additional information in there, but nothing financially significant. And then the last item here is an opportunity we've been talking with management a little bit about, is the Inflation Reduction Act tax credits. We've been talking about this with several public transit agencies across the country. There's some opportunities there to potentially get some funding from the federal government through these tax credits. If you are purchasing clean energy types of assets, so if you have, as part of an overall larger capital project, solar panels, for example, is something that you can get some credits for. Electric vehicles, whether it's buses, other types of operating vehicles, those can be charging stations, etc. So there's a lot of different opportunities out there to receive credits for those. There are some catches to some of that you're not able to, receive credits if they were fully grant funded, things like that. But there are some opportunities, so it is something that we're exploring with you all to see if there's any opportunities there. And I know from working with other transit agencies, many of them are able to capture a good amount of dollars back from that. It is a little bit different a process because as a governmental agency, you're not typically filing a tax return, so there's usually, this is a little bit different because you do have to file a 990T to be able to get these tax credits. You don't have to file the full, go through the full tax process that you might if you were, let's say, a not-for-profit, but you do have to go through and submit a tax return to be able to get these. So just something, again, for the committee to be aware of. We're working through this with management, and hopefully there'll be some opportunities there. With that, that covers everything that I wanted to present related to the audit process, but happy to answer any questions that any committee members might have.
All right, thank you, Mr. Shelby. Appreciate it very much. I think any questions from the board members? Comments? All right, Mr. Powell?
I have,
Oh, okay.
no,
Ms.
go
Ms.
ahead.
Ms. Scott? Go ahead, ladies first.
Just a quick question. In regards to the tax credit for the electric buses.
Mhm.
Does it matter when the buses, possibly when they were ordered as opposed to when you received them?
Yeah, it's based on when they're placed into service. So when you actually have received them and they're placed into service and start operating, that's when you would be able to capture the credit. So it's based on that tax year.
So
When
if
that
they're
happens.
received in 25, it would be, you would use it as a tax credit for the year 25?
Correct.
As
Yeah.
opposed
And
to-
right, I assume you all have not filed a tax return ever. So one of the unique aspects is if you haven't, you can choose which tax year you want to elect. So depending on what is the most beneficial for you, you can elect whatever tax year, whether it's a calendar year, whether it follows your fiscal year of June 30. But yeah, let's say it was a calendar year. If it is placed into service in 25, you'd be able to file a tax return in 25 to get those tax credits.
Thank you.
Yeah.
Thank you.
And this is something, not to go too deep into the weeds on this, but it is something that currently the act goes out. I think you can get these credits through 2033, I believe, at least some of the credits. Now, obviously, as a new administration, we'll see what all happens there, but based on where the act is currently, this is an opportunity that's out there for several years.
Great. All right, Mr. Pond.
Everybody's excited about tax credits, but my question is, I don't understand how we would benefit financially from a tax credit. I could see how we could benefit from something that's given to us, but a tax credit, we don't pay taxes, so could you
Yep.
help me out there?
Yeah, it's a good question, because that's usually one of the first comments is, well, we don't pay taxes, so who cares, we can't get a credit. It doesn't matter. So even though you're not paying taxes, even though your tax is zero, you can still get a credit of $1 million, depending on, how much you've spent, how much of it qualifies, and how it was paid for. So there is some limitations. Again, you can't take, let's say you had just again for ease of numbers, let's say you spent $1 million on electric bus and 100% of it was federal grant funded. Well, you can't get any tax credits for that because they've already given you that. But if it was only, let's say, 50% grant funded and the other was just from local dollars or unrestricted, you can capture up to that amount. And then there's, you wouldn't be able to get the other half of it. I think it's 30%. I'm not a tax expert. I think it's 30% though that you're potentially eligible to go up to and receive tax credits for. So you can actually receive dollars back from them, even though you don't pay taxes. Interesting.
Great. All right, any other comments from the board? I just want to have one comment. That was the understanding concerning the comments you made concerning the posting of the $12 million in lawsuit. I understand that normally it would have been accrued. I do understand that. And so what I'm understanding is that instead of doing a prior period adjustment, you basically are going to apply it to 2025.
Yeah, well, instead of management posting it into the current year, the current audit year that we audited fiscal year 24, they're going to just record that expense in fiscal year 25.
Okay.
Correct.
And that sounds fair.
Yeah.
I know that's difficult when you have these cutoffs with so many moving accounts and moving activities in anybody's ledger where things land. It's all about when for some it may be when it's paid, some of it's when it is invoiced. So it just depends on what you're trying to do in accounting practice.
Right.
But anyway, I just want to make sure I understood also. Okay, thank you. All right, any other questions? Okay, hearing none. Thank you. Appreciate it, Brad. Appreciate it very much.
Thank you.
All right, the next item on the agenda is the internal audit activity briefing by Emil Zanoff, AGM Internal Audit. Emil, you have the floor.
Thank you, Mr. Frierson. Mr. Frierson, Mr. Greenwood, members of the MARTA Board of Directors, good morning. My name is Emil Zanoff. I'm the head of the Internal Audit Department, and I'll give you a brief briefing on the internal audit activities for the fiscal first quarter of FY25, beginning July 1st and ending September 30th. Next slide. During that quarter, beginning with the operational audit group, we initiated 4 major projects. The first one related to the Clayton County Operations and Maintenance Facility, employee timekeeping audit for the entire agency, another capital audit around the Indian Creek Station, and finally, this was more of a compliance audit in bus operations related to how we manage and monitor the commercial driver's license and related medical cards for everyone that's required to have them, which is not just the bus operator, but also other personnel. Those audits have been finished or were finished in Q2 and will be reported at the next audit committee meeting when I brief you for our activities related to Q2. Next slide. Related to prior operational audits, these are audits that were discussed in prior audit committee meetings. There are several in-process significant findings which we are tracking to see if they will be remediated. With respect to the streetcar, we'll remove that audit from the audit committee reporting because the finding that we had there was fixed. Wayside access, we're almost done there, and attracting and retaining employees in the HR domain. I just received the final element that had to be done, which is the employee handbook. I received a copy of that this morning from Cassie Dorner, so we're going to drop that off next time as well. As you all know, we don't remove stuff until I get a copy of documents that show me that things were done. So, thank you, Cassie. Let's move on to the next slide. Again, a couple of in-process items here. The last item here is the capital improvement program with a lot of findings, many of them closed, some of them still in process. The plan for this year was to actually do a follow-up audit so we can get a clean baseline and we don't continue with these large numbers that distort our metrics. And just to see where we are as of today, given the context and the environment as of this year. So we'll kick off this audit either this quarter or next quarter and get a clean baseline and replace this with a fresher view of where things are. But so far from an operational perspective, there's no past due items to report. Let's go to the next slide. Switching over to our IT and cybersecurity domain. We concluded one IT audit related to IT software asset management. The reason we wanted to look at software asset management is because it's a critical activity in any large enterprise. When you're in a large enterprise, you have all kinds of software assets. If you don't know what they are, you cannot patch them or you cannot install security updates, and you can't get rid of them when they become obsolete and they become your vulnerability. So we had to do that audit. There's 4 findings that are in the process there. In the quarter, we kicked off 2 other audits that we finished recently. One was around Windows 10 end-of-life management and plans. So we'll report that at the next audit committee meeting, as well as something that we call software management. I would leave it at that and just spare you some of the technical details, if you would forgive me for that. Anyway, let's move on to the next slide. We're tracking 15 significant findings, of which 7 were remediated previously, and 8 as of this quarter were past due, primarily in the first line, which has to do with some important elements of our IT operations. I've had conversations with Rhonda. I feel confident that we will be able to move those to the left and have a better plan when I come to you to report at the next audit committee meeting. Given the size of our enterprise, solutions are not always easy. They did ask me for an extension. I did not grant the extension, and I have to disclose that. At the end of the day, it's ends up being my decision whether to do it or not, but I'm hoping that by the time we meet next time, this will be in a different column. So let's move on to the next slide. The contract audit group has been very busy and continues to be busy. We issued 30 contract audits. Of them, 29 low risk, one needs attention. The audit team identified $3.4 million in unsupported cost when we looked at those contract audits, and a small amount of unallowable overhead rate type of expenses. So continuing to be a high production unit within the Department of Internal Audit. This is 1 quarter worth of audits. We exited the quarter with 30 more in flight, which puts us on track to about 120 audits in just that one group for the year. That's our run rate, and I think we're going to hit about 120, maybe a little bit more, which historically is the high end of the spectrum, but we're just going to continue to support the authority with everything that we got. Next slide. Fraud, waste, and abuse. We just had one complaint or one report about an employee who allegedly had falsified some of their timesheets. So we're going to take a look at that just to see if it's a pervasive practice or something that may have been isolated. When I looked at the nature of the case, we will look at it, but I wouldn't lose any sleep from an enterprise perspective. Okay. Next slide. Mr. Chairman, this concludes my presentation. I yield the floor back to you. Thank you.
Okay. Thank you. Appreciate it very much, Emil. Are there any comments or questions from the board? Ms. Rita Scott?
On slide 5, end of life plan review,
Yes.
who uses that software?
So Windows 10 is the operating system that's throughout the authority. Every laptop, every computer. I don't want to go into any more technical details because we don't want to tell people where we use it, but there's other critical components of our computer infrastructure that use Windows 10. I'm sure you probably still use Windows 10 in some of your laptops at home. Mm-hmm. It comes to end of life, I think at the end of October 2025. And we wanted to kind of take a look and see if we can help our friends in IT to have a plan to exit, because it sounds easy, but it's anything but easy. Changing the operating system on every piece of equipment is it's not an easy thing to do. There's no magic bullet. It's a lot of grind work, right. And hopefully we'll get there by the end of. But that's why it was on the
Thank you.
on the chart. Yes.
I understand. Thank you.
All right, Mr. Alpine.
Go one more slide, I think it's slide 6. I know we've had a change in leadership there over the shorter term, and also finding very qualified technical people is rather difficult and a challenge. So is a lot of this more of a manpower issue, or is it a budget issue that the money wasn't there to upgrade software, whatever it could be? I'm just trying to get a sense, because I know those people qualified to do that work are difficult to find in place.
So I'll allow Ms. Allen to respond to that question because she's managing the money.
I think it's more of a strategic plan as to how we address some of these things. So, and you mentioned that there was a change in leadership, and so we wanted to give Tyson a little bit of an opportunity to understand the entire system that he's working with. So there, for instance, we have a lot of servers that we were working to buy to replace, right? But there is also an opportunity to move to a more cloud-centered environment. So we have one group that may want to purchase servers, another group that says, let's go to the cloud. But we needed to give ourselves an opportunity to make sure that we have a collective strategy, and that's just one example, right? And so once we have that opportunity to kind of look at those things, then we say, okay, well, what is the tool that we need to purchase to help us to ensure that we're moving those things into the right category? So, managing our assets and moving things. We talked about the Windows 10, for example, and you mentioned you guys gave us grace on, well, how do we move from one operating system to another? We also have to take a look at every application and what those applications are allowed to use, right? So, again, tools that will allow us to know this application only runs on Windows 10 this application is ready for Windows 11. So it's a little bit of both, right? So looking at the strategy, allowing Tyson that time to understand what he's working with, the landscape that he's working with, and then purchasing the right tools to help us to manage those things. Yes.
Thank you.
And Mr. Pond, that's also my understanding of what happened.
Okay. Well, I will defer to your wisdom, so.
Thank you. I have a comment, and that has to do with the, I'm sorry.
That's okay.
Ms. Ross, go ahead. I didn't see your name there. There you go. Go ahead. Ms. Ross.
And I really had a question for Mr. Greenwood, just in general of how do you feel about these audits? You know, how do you feel about the management audit on the challenges with addressing the observations? And how do you feel on the financial audit of, you know, you and I have been in meetings where people say, you know, transit agencies are going to fall off a financial cliff. It doesn't look like we're headed that way, but just what are your thoughts on these audits?
Well, you know, the collection, the three audits that we've just been reviewing this morning give me a lot of confidence. It's true that there is a financial cliff writ large in the transit industry across the nation, but MARTA has always been somewhat, you know, in a rare small group of agencies that is not looking at a financial cliff. In fact, he's not here, but our deputy CFO likes to call them a bunny hill. But what it means is we have to continue looking around the corner for other ways to continue to shore up our revenues so that, you know, as federal funds deteriorate, MARTA still has a long-term option for those things. So it gives me a lot of confidence. Some of the observations that we're finding, I rue the day that we don't have any observations. So, you know, it always gives us an opportunity to grow, look around corners, and find ways to make ourselves better, regardless of what our track record was in the past, and it's been good. This work is based on, or these observations are based on the work that folks are doing at MARTA. It's not, I don't think we can luck into a good audit review one particular year. It's really based on years of operating discipline and financial discipline. And thank you for the question, because it's an opportunity for me to say thank you to Team MARTA. Regardless of what is said of us in the moment out there from time to time, we can rely on these steady, solid, in-depth analyses to really rest our hats on.
Excellent. I had a question concerning the contract group audit, slide 7. When these audits are done, are they done from a system standpoint, or are they done from the actual contracts that are generated when you talk about looking for these inconsistencies in price changes?
So these are triggered by various different contracts that are either already, you know, multi-year contracts and they have to be billed for the following year, or they're triggered, for example, by single or sole source procurements that come to the board.
Mm-hmm.
Before they come to the board, they have to go through the audit department, and we analyze the pricing to make sure that it's logical, rational, and supported. And then we provide the answer to management. So they're triggered by specific procurements, specific contracts.
Okay. Good. And then that variance is what you have a conversation about reconciling. The variance between what is fair and reasonable and what it should be.
Every now and then we have those conversations about why we think something may be supported, why is it supported, why is it not supported. Sometimes vendors are a little slow to provide us everything, so the management and executive team responsible for the procurement has to push and get us the data. And sometimes, you know, I've been on the other side of the equation for many, many years, and you get away with whatever people let you get away with.
Right.
And if you can't get away with that, you get away with what they let you get away, and, you know, sometimes they just don't get away with it.
Well, thank you. And I just wanted to make that clear, because I think the public needs to understand how we do these, you know, forensic audits, and how we really take a look at what goes on in this space and make sure that we're properly documenting it, and also, you know, saving money from things like you just mentioned. So, all right, thank you. Ms. Rita Hardwick, you have
I
Comment?
think this is
Yes.
more of a statement than a question, but having sat on the audit committee for, I don't know, a long time, we've come a long way. The audit committee meetings did not used to look like this, and there was a lot of issues. Let's just put it that way. And to be able to put all the policies in place that the audit that the audit department has done, and the way we approach things, there was a lot of adversarial relationships when it came to audit within the organization, and that's not the case now, at least from what I can tell. And I just want to say thank you. And then we added, 3 years ago or 4 years ago, we made a conscious effort at the board level to add information systems, IT technology, cybersecurity, all under the audit committee, so it got a focus, because it really didn't have a focus. It kind of just fell in the middle of things. So I think that's important that we did recognize that to be a key issue for us going forward. And I appreciate that it's a tough issue to discuss at any meeting, so we appreciate that. But we've come a long way, and for those of us that have sat here and watched it, thank you.
Thank you.
Absolutely, thank you. All right, any other comments? All right, thank you, Mr. Mill, appreciate it very much. There are some other matters that's also on the agenda, which you can see from the board, and audit documents for information only, so please review that. If there's no other comments or questions from the board, then this meeting is adjourned. Thank you very much.